Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me. Well, the bullish outside range day that was posted 2 days ago now questions whether the market will continue on to the challenge of 68.40. After failing to get the break last night, the market has retreated quite somewhat to a potential challenge now back to the level of 67.70. Although we've seen some rejections from this level, I'm still bearish, and with the marriage still remaining to the RSI and the MACD, could see this level taken out in the next 24 hours. And if so, it exposes the region of 67.20 to 66.60.80, where the base is currently holding for the Australian dollar in the broader terms. Any advances should give opportunity above 68.40, with a cap remaining firm at 68.85 to 95. Well, as you can see, the euro dollar remains apprehensive in taking the challenge higher. After the update from the minutes from overnight indicated that most Federal Reserve officials believe that last month the 3 rate cuts that have been made this year is enough to keep the economy going until any terms of weakness returns, with the market looking to a range of 1.5 to 175 last month in terms of its rates. It is assessed, though, from the technical point that any advances towards 111.15 to 25 should continue to serve out as a bearish cap for the market, and I do believe we will eventually get a turn to the downside. But to get that, we need to see a break of 110.35. If so, that reinstates the downside of 109.50 to 70. But from the bullishness since this outside range day, the fact is that the market is somewhat questioning the challenge higher. And also the dollar index is still remaining above the level of 97.50 after posting an intraday high of 97.89. Looking at the dollar yen, is that the market still remains negative, and from the effect of the bearishness should see the challenge eventually of 107.85 to 108 the figure. It has been reported that the phase 1 trade deal with the US and China may now not be completed this year. Along with that, US-China trade discussions are starting to deteriorate. In the situation that Hong Kong earlier today, the Congress passes the Hong Kong Rights Bill. China has accused the United States of interfering in its internal affairs after the US Senate passed a Hong Kong Rights Bill. Beijing warned it would take countermeasures if the bill is signed into law. That's another thing to keep a note on, and no doubt we'll see further yen strength and a dollar weaker in terms of safe haven rushing for the yen strength. Any advances still expects 109 to cap in the short term. The pound still remains sideways and little to go on, and still seeing the bulls and bears sitting out of any challenge, and therefore could see little to go on in the next 24 hours. Gold still maintaining its bullish stance since we had a spinning top bottom, a bullish candle, and then another hammer bullish candle. With the fact is that with the risk to safe haven increasing, that I do believe the market will eventually take on the challenge to 78.81 with the objective holding at 88.94, support seen at 68 to 64. And finishing up, well, we've got a bullish outside range day and we've got the rebound of $55, now looking towards the challenge of 57 to maybe higher, $58 to $59 a barrel. It is nice and comfortable to see that the fact is that we saw a very strong rebound from this level, and therefore it does put further scope to the upside. Well, that wraps up for today. Thank you very much for joining me, and as always, look out for the intraday report and hope you enjoy the great start to this new day.